What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 25th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to go about answering a big question. Are we finally in the later stages of this correction in crypto markets? Even in this uncertain time in the macro environment, are we finally ready to start trending higher for Bitcoin and other cryptocurrency assets alike? We've got a lot of things to dive into today's video, and I want to share my candid thoughts as we go throughout it right after our quick sponsor. And our sponsor for today's episode is TaxBit. The 2021 tax season is here. When it comes to crypto, dealing with taxes can be difficult, but it doesn't have to be. TaxBit helps you calculate your tax obligations on your cryptocurrency activities by plugging in your various exchanges and crypto platforms. With support for over 481 crypto exchanges, you can track your crypto accounts and wallets with ease. And thanks to the TaxBit network, your exchange likely provides free tax documents powered by TaxBit. If you're interested to learn more, check out the link in the description below and start this year's tax season off with ease. Alrighty, everyone, so let's go ahead and kick things off by taking a look at the broad sentiment across the market. Whereas over the past week or so, we've been seeing most cryptocurrencies dropping down in double-digit territory, many of which still remain down in double-digit territory. The good news is that over the past 24 hours, we've seen a lot of cryptocurrencies making double-digit rebounds back in price, showcasing signs here that the market is buying up on this dip. And a lot of the fear that had come in here over the last 24, 48 hours is starting to fade out of prices. We're starting to see a rebound back in markets. Now, what I want to focus on first, as we are taking a look at the general sentiment of the entire market, I want to take a look at total market cap. It's one in which we've talked about here on the channel before, and I think, again, is something that some other people out there watch in the crypto space, but I don't think enough people focus on. Because people, when they're investing in the crypto space, especially institutional investors, large-scale investors, those who are looking to accumulate more positions, they're going to be looking at very key things here, and they're going to be looking more specifically at how the total market is reacting. Now, I do want to spend some time to dive into the 3-day candle view here, where we're taking a look at each of these, again, representing 3 days worth of price action on these candles on the chart. And it's going to take us all the way back here to November of 2022. But first, let's go ahead and take a look at the short term. I want to go ahead and focus on what happened yesterday. Again, as yesterday went through another wave of fear here, we saw market valuations dropping from the previous close here at 1.6 billion down here towards 1.52 billion, wiping out, I'm talking in terms of billions. I meant to say trillions. So we went from $1.6 trillion down to 1.5 trillion yesterday. So $100 billion wiped off the map there. And by the end of the day, though, we actually rebounded up on those valuations. We came right back up, closed on those losses, and really put ourselves back here where we were back about 5 days ago. So total market cap's making some significant rebounds here, really led by the strength we've been seeing in Bitcoin and Ethereum. Now, all the while, the short-term rebound looks really nice here. What I think is most important is to take a look at the 3-day view. And we have to ask ourselves why we saw such a significant rebound at around this price range. And it's exactly what we talked about back a couple of videos ago here, and watching the key trend line here that has been playing into Bitcoin and the entire market support since back here in January. When we take a look at total market cap, we can see here that since back here in January, we've been seeing a consistent general range here where buyers have come in here on prices, taking into consider important lows here before the rebound back here in July into September, back here in January of 2021, before we had the spring up here to 65K. And now we've been seeing buyers come here yet again, like they did here in the later part of January, buying up prices around this $1.5 trillion valuation range for the entire crypto market. Now, I want to emphasize how significant this is, and there's a few reasons why this price range matters so much. It's not just the trend line here that matters the most, or is the only thing to be focusing on. It's important to note that from the peak here at around the $3 trillion valuation, this is a clean, near 50% correction in the market. Right, you can try to get the absolute formalities of it, but generally speaking, we've come up here from a $3 trillion valuation down here towards 1.5 trillion. And as you guys can see, that's edging right there on a clean-cut 50% correction. It is no question as to why investors are buying at this range, that the market order flow is starting to favor in the case of the bulls, and that they're regaining the trend in the short-term price and eventually the long-term trend here. We've seen this exactly back here when we came from around 2.58 trillion down here towards 1.4 to around 1.2 trillion. Excuse me, 1.14 to 1.2 trillion here back during the previous correction. 50% plus corrections are where buyers are usually going to go in heavy, right? And again, you can focus on the niche percentages and try to time it perfectly, but the closer you get towards that range, that's where buyers come in, right? We're humans. We look at psychological levels of numbers. We look for those big even levels, 30, 40, 50, 60% corrections, but mainly 50% off corrections in the market is very, very typical when it comes to finding discounts in the market. And crypto, although it has greater rallies, tends to have more severe corrections than other markets. Now, this market has been characterized, though, by even more dramatic short-term rallies in price throughout the bull market, and also even heavier corrections than what we see in previous cycles. So there's much more volatility or major volatile swings over multi-month periods within the crypto markets this time around, this bull market. So that's just indicative of this market due to the amount of leverage and credit in the system. But the biggest thing I want to focus on here, we talked about this the other day here, is the consistent higher lows in price, right, and the higher highs. And it's not just in total market cap here. It's not just driven by, for example, one specific crypto asset like Bitcoin. We find this across the board. We can see here in regards to Bitcoin's chart here, not only in the short term, right, we're propagating higher lows here compared to where we were here in January. That's a really significant sign, and I'll focus on that in a moment. But we can also see here on the longer term trend, right, higher lows here, generally across the board here. Price is getting bought up at higher ranges, even with all the macro uncertainty, all the fear, all the people saying it's a bear market, and the market's going into turmoil, we're still setting in these higher ranges. And you find the exact same thing here in the short-term and long-term trend for Ethereum. Higher lows than what we had back here in January, right? Even though it feels much more fearful now, higher lows for price, faster rebounds, and on top of that, much higher than where we were back here in February, July, January, any of those levels in the past. Not exactly indicative of a bear market, right? Higher lows are signs of confidence that all the while during periods of fear, the market might feel uncertain about things. There's a set of buyers out there who are driving price and saying, nope, I'm not waiting for it to go back down to those previous lows. I'm buying in now. I'm market ordering on the asks on the order book. I'm going to drive up prices because I believe even though I'm going to have to face 1-2% slippage on my order, right, I'm still going to buy in. I think this is a discount opportunity. I'm not going to wait for a limit order to get filled. I'm buying in now so I secure my position. That's exactly what's happening when people are buying like this. Now, I want to go ahead. Usually I'm someone who's focusing on the long-term trend here because I think this helps us to really get an idea here, whether it's Ethereum, whether it's Bitcoin, or the total crypto market, to showcase that the trend is confident, that we've got higher lows and higher highs, right? That is not indicative of a bear market. But I want to go ahead and focus in on this area right here, right? We have had probably what is the biggest, and this is the thing I think about in hindsight. Even I was kind of falling into this trap yesterday, being completely reflective. A lot of people were pointing out the fact that it's like, Bitcoin really hasn't been servicing as the hedge or the kind of digital gold that people have been talking about. And all the while, it's definitely not increasing dramatically in price. We're not trending significantly higher here in regards to Bitcoin's price during this fearful event. I want to go ahead and point out something really important here. Back here in mid-late January, where Bitcoin's price or the total market cap here was around 1.5 trillion, we were in a much more calmer period in the markets. Yeah, you had a bit of Fed concerns, right, about the Fed tapering the balance sheet. But really, this whole crisis that's been going on in Ukraine, between Ukraine and Russia, that was kind of like a 20% chance something might happen, right? There was some degree of concern around it. There was definitely tensions growing, but as per usual, people thought it would just kind of fizzle out. We now know, as of yesterday, that this conflict is real, and whether or not it's going to de-escalate or not, right? Again, we're going to have to see how that goes. And I'm no geopolitical expert. I'm not going to pretend to be. But the thing you cannot ignore, if you're just taking a candid look at the chart, is the fact that prices didn't dip as low as they did back here in January. And we see that here in Bitcoin, right? It didn't even go lower than where it was back here. And the fear in the market, I would assume, and the global economy with what's going on right now, what could be the major first attack and Western soil in Europe in a century, right? Or okay, not a century, not exactly a century, but decades upon decades, right? The first major geopolitical conflict that's really potentially scaring, a lot of the West here, wasn't able to drag Bitcoin's price down. Nor was it able to do that for Ethereum. One of the biggest macro events that could only be compared to the kind of tension we had in the Cold War or in World War II wasn't able to drag down Bitcoin. That is an incredibly resilient sign for crypto markets. And it either tells us one of two things, simply put. It either tells us that people are buying into Bitcoin and some investors do see a benefit in Bitcoin, no matter where they are in the world. They could be people who are either in Russia and Ukraine. They could be anywhere across the world who feel that investing in Bitcoin now is a good time, right? Just because of the fear going on. Or it literally just means that this conflict going on no longer has much more of an effect on price, at least at this price range. There are buyers out there who believe that it is a good time to buy crypto, right? And seeing the resiliency, the volume here, bear in mind, you can see here for the trading on Ethereum, a Tether pair, this was the biggest trading day for Ethereum since back here in July of 2021. More than half a year here, the biggest trading day in volume here. And in the end, if you take a look at the short-term chart, a lot of that volume coming in on the buy side, driving up prices higher, building a nice foundation at 2,600. That's incredible to see. So again, I understand, guys, it's been a very difficult time in the market, right? But the thing I want to emphasize and kind of, close out of here in regards to just talking about crypto specifically is that this is the kind of resiliency we want to see here on a bottom. We want to see buyers coming in, and they're coming in big with some of the biggest record-breaking volume that we've seen in crypto markets for the past couple of months. Exactly the same kind of things we saw back in July during that pullback when everyone was thinking that we're going to go down to 10K, 20K, that crypto's dead, it's in a bear market. And then you see a major surge of buyers coming in, accumulators driving up and setting in that new low. That's going to drive us up and continue to trend higher with higher lows and higher highs. Right. Now, I want to go ahead and talk about another important thing here. If back to one of the topics that we did talk about here, obviously we know what to look for in regards to price. And what we're seeing right now generally looks pretty good here for the rebound here in the short term. But I want to go ahead and talk about some other things you guys can watch to see whether or not the world is getting in a better state of confidence with the whole conflict. One of them is the MOEX, the Moscow Exchange. All right, tracking the MOEX. You can also track as well major companies like Gazprom, all these major equities that are trading in Russian the Russian stock market. And we can see here that again, things have improved since the dramatic lows that were here just yesterday, or back on the on the 24th. But again, we want to continue to see this trend higher here. We want to see the fear, again, this kind of, I think, peak fear that we saw here the other day where equities really declined significantly. We want to see this continue to improve higher because the markets are likely going to price things in before we see it in the mainstream headlines, right? You just got to accept that at the end of the day, right? I would say the kind of information you'll get here from where price is trending will showcase to a pretty high degree of confidence that things are starting to improve. Right. So anyways, another thing as well, taking a look at the NASDAQ. NASDAQ futures are neutral since the significant rebound we saw yesterday. We saw about I think a 7 or 9% jump up here in just a matter of a couple of hours for the NASDAQ. Right from the lows, you have about 7.5% move here for prices. So that's really exciting to see. Now, I want to go ahead and talk about one last thing here, right? So we've seen all these signs of confidence. The markets might be finally in the final stages here. Going towards our center topic. But I want to go ahead and talk about one last thing here to kind of wrap things up. I know some people out there who generally like Bitcoin also are big precious metal fans. Now, you all know I have nothing, if you've watched the channel for a long time, you know we've covered equity markets and commodities and all kinds of different areas of the financial space. I have nothing per se against gold or silver. I even own a little bit of gold and silver, not too much. It's like a fraction of my portfolio. Some physical gold and silver, like a friend gave me, right? But the thing I want to emphasize though about gold and silver is that I honestly, and this is the question I constantly get asked by people, is Nick, like gold started to trend higher. Do you think I should rotate my Bitcoin for gold? Now I want to go ahead and try to answer why I don't think that's a good idea. Even if gold were to start trending higher, and I really do believe that there's a good chance it could do that, right? Gold's price, to be honest, and we've talked about this in the Dash report here, this trend of a potential cup and handle to 3,000 sometime in 2024, 2025. And I think we are very much, especially if conflicts continue to remain at this degree, we could very well see gold enter into a breakout here, maybe even without conflicts, still just trending higher here and starting to become more of a favorable asset once more. It could very well happen, right? And so far, again, just taking off the drawing, so you can see the technical setup here is a clear cup and handle. It's a clear cup and handle here in price by now with the kind of trend up we've seen here over the past couple days. Now, it is important to note though that we've seen here a lot of the gains that were coming through yesterday faded down very quickly. That's not what you want to see here for the trend to move higher. And on top of that as well, I'm going to go ahead and focus on the big selling point here to my reason for my sentiment against investing in gold or swapping your Bitcoin for gold. Here's the chart you got to take a look at. This is the monthly chart for Bitcoin against gold, the ratio of BTC to gold. If this is trending higher, it means Bitcoin's going up. If it's trending lower, that means gold is outpacing Bitcoin. I gotta say, I don't know what your time preference is, guys. You know, we all are different at the end of the day. My time preference is preparing for my long-term future, constantly investing in the best asset possible. I'm not here to make a quick buck and get out of the market. And because of that, and I think many of you are probably in the same shoes, this chart makes me very confident that I'm positioned in the right spot and that I have no reason to go rush into gold, right? So case in point here, right, and you can even take a look at, I think another great way to view it is the 12-month chart. Makes it even more clear here, right? Now you've got some years here where, of course, yeah, if you were to know when to time to top on Bitcoin's bull markets, right, and maybe rotate into gold or dollars, yeah, so you can see these years where there's pretty significant declines, but overall, pretty much the vast majority of years, Bitcoin is outpacing gold significantly, sometimes hundreds if not thousands of percentage points higher, all right? So again, great way to take a look at that, but you might be saying as well, like, you know, like maybe I'm invested in stocks. Should I rotate from my stock positions into gold? Well, I have to say all the while gold is at a nice discount point against equities, and the longer term trend really had a bottom out here back in the peak of the dot-com bubble, right? So then from there, gold started to trend higher. All the while has been in the decline here since 2011 against equities, and it's still making in lower lows here and generally consistent resistance here at 0.7 on the ratio. This is gold divided by the S&P 500. Not looking too great. You want to take it to the annualized look, right? Same exact thing here. This really showcases here that gold, all the while, it can have some breakouts here, and definitely might not be bad to have some positioning here. They are generally separated by multitudes of decades, right? And we might be coming up on here, but I got to be honest with you all, I think crypto has really stole the thunder here. Bitcoin has stole the liquidity, if you will. You can say it's stolen or whatever, but I think it has been a better asset in this case to draw new liquidity from millennials and Gen Z than gold has. It just doesn't appeal to people, right? Due to its, the intrinsic properties of crypto that are programmed into protocols like Bitcoin and Ethereum, right? So if that wasn't bad enough, let's take a look at the last final chart here. Gold divided by the M2 money stock, right? This is the broad money supply. And we can see here that, again, it's just barely, if you want to kind of take it from a perspective, if you bought gold in 2006 or 2008 or here in 2015, it's just barely kept up with the core increase in the money supply. And that's not even including some other degrees of measurement of money and credit in the system. So, again, I would say that all the while it's okay to have some gold and silver, right? There's nothing wrong with it. It is not the top performing asset. And this is, again, why you've got people like Peter Schiff out there in the space. People, again, I used to admire a lot. And a part of me is still has a soft spot in my heart for him. We've had Peter Schiff on the channel before. Why I find it so disingenuous to talk negatively about crypto, right? Gold as an asset Like, I think, again, I could go on to the long-term debate about it, but the fact of the matter is gold, like any other asset, has degrees of intrinsic value based on what people really care about it. And at the end of the day, gold, the reason it's a multi-trillion-dollar market and the reason Bitcoin is now becoming a multi-hundred-billion-dollar asset and eventually will become a multi-trillion-dollar asset is because it has limitations in supply and it has a broad network effect of adoption. Those are the only reasons in this case. You can say gold is used as a commodity for this and that. To be frank, it's a fraction of its use case. Most people use it for jewelry, private holdings, right? And this is the important dynamic to understand, which is that in this world, what really drives prices higher is, in this case, having more demand to buy than more demand to sell. It's supply and demand. Assets are similar to goods and services in that way. And I think that there is plentiful amounts of cash in the system that is taking upon this opportunity to buy into crypto during this fearful period at a 50% discount. And we've been here time and time again through crypto, and I think yet again we're just repeating history. So anyways, I hope this video provided some comfort to you guys. I want to be very candid here, as we said at the beginning, I think at the beginning of the video. No one knows for certain whether or not this is the absolute bottom in the market. And I don't want to pitch it as that. We even talked again about the other day how we have to prepare for the worst, an idea where we might break below this range and come down, more specifically on Bitcoin's price, come back down here towards this range. It could very well happen. We're not out of the woods yet, but what I would love to see here that's going to showcase confidence is getting back up to this range, breaking past this general 44, 46K level, turning it into support and really trending higher over the coming weeks. It's going to take time. It's not going to happen overnight, but we're going to be here all the way through it, through good times and bad guys. I'm going to do my best to help break down where I think the market is heading going into the future. So anyways, guys, have a wonderful rest of your day. If you like this video, consider dropping a like. It's one of the best ways you can support the channel. Leave a comment down below whether you agree or disagree. I want to hear from you guys, get a conversation going down below in the comments. But until the next one, thank you all for tuning in, and I'll see you all in the next video. Take care, everyone.